Yo guys, karibuni tena, welcome back again to my YouTube channel. And today I've decided to continue in volume 2 of where we ended last time, and here we are going to explain a little bit on the important notes to identify the best order blocks. The first thing that we need to understand is that always make sure that price breaks structure before making an OB, an order block. So that's the first thing you have to understand. Price has to break structure before you have to break structure first, and then you have to return back to that order block, and then you can continue with what you wanted to do, if you want to buy or to sell. So here, the first thing to understand, there should be a break of structure first. This should be one of your rules if you want to trade best order blocks. The first has to be a break of structure, either to the downside or to the upside. The second thing is liquidity always lies at equal highs or equal lows. Price is most attracted to such areas. So price is always attracted to this area because most of the institution knows that most of the retail traders have placed their stop losses at those areas. Either they call them support and resistance trend lines, or those equal lows are areas where there are a lot of stop losses people have placed there. So what the institutions do, they go and grab those liquidity and then they go to their desired direction. So you have to look for those areas, break of structure first, and then you have to check for the liquidity areas. So you have to know that first those liquidity areas have to be grabbed first before the institution goes to the desired direction. So as you can see, this chart here, it shows the equal. You can see here this equal here. You see this equal highs, and there's the signs of dollars. This means that this is where money lies. So what you see, the institution, they decided to grab the liquidity at equal highs with a very large impulse, and you can see the arrow says price spiked sharply to grab liquidity from retail traders who were selling at this resistance. You see, retail traders were selling here because this is a resistance area. So they show that this is resistance. So I have to sell. And that what happened? They grab the liquidity. But understand that after grabbing of liquidity, they'll go up, and then they'll come back again, and then they'll return to that order block, and then they'll continue the desired direction. So notice from the diagram above, retail traders saw potential shorting opportunity. Hence the institutional banks pushed the price higher in order to grab liquidity from everyone who was selling at the resistance area. Yeah, they grabbed the liquidity for those who were selling at this resistance area. Scaling down on a lower time frame from what we got before the break structure, here's what happened. As you can see in a lower time frame, this was a higher time frame. So in a lower time frame, you can see here what happened. You can see this chart, how this chart responded. So you can see this equal lows and these are equal highs. These areas have to be grabbed first. As you can see here down, the price went down here, and these blue areas where we have marked my order block, the price first they grabbed this equal low, and then it went up and grabbed this equal high. You see, so that's what happened. And then we expect price to return back to this blue zone here where I've marked my order block, and then we continue longing, we continue buying the equal lows. Observe from the lower time frame, before price pushed the higher, buyers were taken out before the sharp move up. You see, if someone was buying at this equal low here, he was taken because of this. You see this blue area, this is where the price decided to grab liquidity at this equal lows, and then for those who are buying, and then the price continued to buy, and then for those who are selling at this area, they have pressed maybe sell limit, buy limit. Those people here, when price reached at this resistance, this equal high, and then it broke the structure, and then what we expect is that price will come back to this blue zone here where I've marked my order block, and then we continue buying. So for those who are buying, they end up getting lost, but then the price will go to their other direction. And a lot of people always complain that why does it happen that when I buy, they take first my liquidity and then the price go in my direction? That's because you are trading a retail mindset. You are the liquidity. So you have to try to understand the smart money concept, smart money footprints, so that you can either go and you can profit at how the market's profiting, how the institutions are getting their profits. Number 3, the third point to understand. I think here the chart can read well here. Observe from the lower time frame, before price pushed up, price manipulated to the bottom. As you can see here, there are explanations to this chart, so I don't think I have to use arrows and show people. You can just stop your video and check well and read well, and then you can get the knowledge. The third thing to check for the best order block is always check if your order book is located at higher price or lower price. The main motive is to buy lower and sell high. So we buy lower at the discounted prices and we sell high at the premium prices. So always check if your order block is either located higher. For if you are buying, the order block has to be at a discounted price, and if you are selling, the price has to be at a premium price. So all these things I can teach in my mentorship class. For those who wishes to be taught more and get deep into this thing, they can check me through the comments, or can check me in my number, and then I can give you direction, give you everything. I give you how I can teach you how we can conduct our class in Zoom. It may be 1-to-1 to 1. So just check me. The fourth is order block resting above or below liquidity zone are more likely to hold, so they are good areas to trade from. These are very important points. So you have to check for order block resting above or below liquidity zone, and those order blocks are most likely to respect. The setups, we have different setups on how to trade well. You can see the setup here. We have shift of structure and break of structure and return of order block. Those are the setups. Either you can have a stop loss hunt, you can have a break of structure, and then you return to the order block. Or the second thing, you have a shift of structure, then a break of structure, and then return to the order block. And the third thing, which is very important, which people tend to learn from when they do, you may find yourself trading Wycoff, but you don't know if you are trading Wycoff. So Wycoff schematic, but I will teach Wycoff schematic in an advanced way. You don't need to wait for you just need to wait for spring, and then return to that order, return to an order block, and then you can buy or sell. And you don't need to wait for that long structure of Wycoff. That's why I said Wycoff schematic advanced one. The keywords, you can see SH means stop, hunt, or manipulation. BOS means break of structure. RTO means return to an original order block. SHF is shift in market structure. So we start with stop loss hunt, and then plus break of structure plus return to order block. This setup is the first setup. As you can see this here. The structure. Just check well the structure, read well the words. You can see here there is a bench, stop loss hunt, and then there's a break of structure, and then return to an order block. As you can see here. As you can see, when you are, this is when we the move we wish to sell. When we wish to buy, you can see here the second drawing. I think you can read well. You can stop the video and check well, because I don't have the cursors to show. For mentorship, you can check me. That's through that number. Check me or my number and my you can check contacts. You can contact me on my channel. As you can see the chart here. So you can see the chart here. The chart is here. You can see what happened. You can just try to see the break of structure, the stop loss hunt. You can see the return to an order block, and then price went to a direction. You can see this chart also. You can check well. Just stop the video and check well. You can learn everything. There is stop loss hunt, because these are equal lows, and then the break of structure to the downside, break of structure again to the upside here, and then return to an order block, and then we enter our position, and we get our profits. We make dollars. So the other thing is here. You can see this chart also. There's a stop loss hunt, because you can see here down. Then there's a break of structure to the upside, and then you can see as the price is returning to the order block, it is returning in a consolidating, and that's how it has to go. Then it will go back to the return to an order block. That return to an order block has to be in a consolidating way, or has to be in a passive way, and in a consolidating way, in a way that it does not come in a very impulse. It comes like consolidation, like ranging. It does not have to be with a larger impulse. If you see that a return to an order block comes with a very large impulse, you don't need to risk that much, because that is a very risky. You can get a loss, because if it comes back to return to an order block with a high impulse, that's dangerous and it can lead into losses. Notice from the stop loss hunt plus break of structure plus return to an order block example above, price return to an order block, but RTO stop hunted, manipulated some equal lows, and made a break of structure, and that area forms a potential order block, and we look for same setup around the area. You can see that you have to check first. Is there stop loss hunt? Yes. Is there a break of structure? Yes. And then we have to draw our order block and say and wait for return to an order block, return for the RTO. You can see also here in this chart. Just check well. This is very good, very good, very good. You can see this one also. Yeah, you can see here. This is very good, it's very understandable. You can learn and understand everything. You can see here also this drawing. You can see. Just check or just stop the video and check, because everything I've explained is shown in this. You just stop the video and check. You can just check. Stop the video and check. You can see here, you can see here, you can see, yeah, you can see here, you can see this one. So guys, thank you for those who wishes to learn more and more. Just check me, you can check me through, here and can check me through the YouTube, my channel. You can check me through comments. You can check me through this number here. So you can see here this number. Just check me through this number. Or you can, for those who wants to follow me on my Instagram channel, you just write Serengeti Trader and you can see this sign of a B. You can see this sign and then follow me. Pancho man. So thank you for listening to me. I wish people to like, comments. Don't forget to subscribe to this channel for me to get more followers, so get more subscribers, and also check me in my Instagram channel so I may get more followers. Because I'm still new in this industry, but I'm still new in my YouTube channel is still new. My Instagram channel is still new because I was having a study. I was studying more and more forex before I enter. Now I know perfect how to trade. I know how to do it. I know how to train people, and I can transfer the story to other people and make money. So thank you for watching the video.